So somebody go ahead and give me a market real quick. Okay.
Oklahoma. Okay, see.
Yeah, I got it. All right, cool. So we're gonna do Oklahoma. So we're gonna go ahead and if the first thing I'm gonna look at, if I'm let's just say, like I said, I'm in Central Florida. I'm looking maybe to go outside of Florida and create a company. Okay, I'm gonna look at a high level of monthly investor transactions across the country. Right now, just because I hover over Oklahoma and I see 5,000 monthly investor transactions here versus 41,000 in Texas, that doesn't mean that Oklahoma doesn't have the potential to make a crap ton of money. All right. It's just because Texas is much larger, obviously. Um, the same thing is true. Well, actually, the next thing I do is I look at days on market. Okay. Texas's days on market 64. A lighter color here is better than a darker color because we want a lower number for days on market. So, in that respect, Oklahoma's like nice, 58 compared to 64. And then you go to Florida at 73. I can literally sell a house a whole month faster, basically, in Oklahoma than I can in Florida. Like, that's beautiful. And so if I enter into Oklahoma now and switch it to monthly investor transactions, go into Oklahoma. Um, See, you guys have a lot. You guys got a lot of counties. You start looking at this point and you're like, okay, well, I see great counties. I see not so great counties. But does that mean that, let's just say, there's not deals to be made in Kingfisher here? No, it just means that Logan has clearly got more opportunity than what Kingfisher is. If I'm scaling out a company across Oklahoma, then I'm going to focus on the places that have the most amount of investor transactions to put myself in the highest ability to be able to sell transactions faster. That doesn't mean that I'm not going to go into Kingfisher. I'm just probably not going to go in there as fast as I would, say, Oklahoma City, Oklahoma County, which I'm assuming Oklahoma City is in Oklahoma County. That was just a guess, but makes sense to me. And so I would be in Oklahoma County before I be in Kingfisher. If I go into Kingfisher, though, and I look at it from that perspective, I can see, okay, well, that makes sense why it's being dragged down. Most of the area is so remote that it doesn't really matter, right? There's only really two zip codes that matter to me. And so maybe I throw in the zip code of 37350, but I'm not going to pull in the whole county, right? And so just looking at those different nuances where across the state of Oklahoma, I might not be like, I'm in every one of these counties. I might be in like these 50 zip codes as an example. Okay. So if I go into Oklahoma now, well, first of all, what I like to look at is I like to look at the state as a whole. All right. So I see average price point of the state. I can see 136 to 346. This gives me an idea of the statewide. If someone's thinking like, I think I'm going to move to Oklahoma, I like to get an idea of what type of person is there. If I'm living in Destin, Florida, or Fort Walton Beach, and I'm thinking, who's going to move to this area? Into my mind, I'm thinking, okay, beaches, condos. Like I'm thinking 600 to $800,000 properties. But that's because I'm say not from that area, and I'm using my predisposition thoughts on just my what I think is maybe there. Oklahoma is pretty on target, right? It's a predominantly first time home buyer price point. It's not to say you don't have more expensive properties, but the type of person moving to Oklahoma is probably somebody who's looking to get into a lower cost of living, and probably be a little bit industrial, maybe have some land, whatever. I don't know. Oklahoma City is probably a little bit different than whatever else. I'm just, again, using my predispositions. I'm just looking to understand Oklahoma as a state. And every single county is a little bit different within a state. Different counties have different like vibes, if you will, different industry. And so I like to get an idea of the state, because if I were to go into a county and then I would be like, okay, well, every address in this county is like 500K or more, I'm probably not going to market in that county unless I'm doing something very particular and very niche. There's not going to be enough volume there for me to build a consistent business. I can build a niche business there. Like maybe it's like Airbnbs in a specific location that's really popular and unique because maybe they filmed a movie there or something. I don't know. But like those kind of instances are very random. They're not really what I'm building a business off of, in the form of what we do, as flippers and wholesalers. All right. So anyway, I'm going to take that into account. I'm going to use that information. I'm going to start looking at these different counties and getting an idea of which county has the most amount of investor transactions. the lowest days on market, and it was within the price point that fits within the 50% of the market. In this case, Oklahoma County does this very well. Tulsa does this very well, probably because everywhere else is relatively remote. I'm not quite sure, but Oklahoma and Tulsa, they're not like right next to each other. They're kind of pretty decent apart. So I know that those demographics are going to be a little bit different, but they're not going to be too far off because our whole state is within that price point. All right. But I know that if I'm going to stay within 250 to 350, I'm probably going to be a little bit more in the people that can afford to buy and move based on my numbers in Oklahoma. Okay. And so I'm going to go into Oklahoma City now, or Oklahoma County, and I'm going to look at my zip code level. Again, it's really important to understand that at a zip code level, just because a zip code is light, like this 73142, does not mean I don't necessarily want to pull data in that zip code. It could be that there's a lot of neighborhoods within this zip code and only a few of them are good, right? And so the way I do this is I just take a screenshot of the map here. It's not the perfect, methodology here. I use the snipping tool. That's not right. Oh, go away. I just use a snipping tool. I just take a little screenshot here so I can see where it's at. Because when I switch it to neighborhoods, it switches to neighborhoods, and I don't know the state enough to know the areas. Okay. But if I do that and I look at my little image here, okay, predominantly 73142, okay, is down about right here. All right. And I can't quite tell if this is part of that area or not. If I was local, I'd have a little bit better idea. But I can tell for sure that this Roxborough and this Warwick Estates is places I don't want to get data in. Harvest Hills, however, is a place I do want data in. And so again, the thing here is just to know that it's not that I don't want the whole zip. It's not that I don't want properties in that zip code. It's that pulling the whole zip code is going to give me, say, like 2,000 records that don't matter to me. And so it'd be better for me to pull those two neighborhoods and, just hit the neighborhoods. Now, if it's only a difference of, say, like, 300 to 500 records or something like that, like, hey, that's not a big deal. But if I'm doing direct mail, for example, that could be the difference between me hitting another county or another good neighborhood versus not. And it could make a really big difference because maybe I only want to spend $500 a month or $1,000 a month on direct mail. And I want to make sure it's going to the right neighborhoods that has investor activity that buyers are buying in. All right. So it's really important to know, don't devalue neighborhood level stuff. Like clearly, we can see good neighborhoods versus bad neighborhoods within this region here, which looks like it's probably, I'm guessing, Oklahoma City area here. And so I definitely want to look at the neighborhoods to get an idea of where my hot pots are. Like Lone Oak Point's got 14 investor transactions versus 8 here versus 8 here. I want to get to the point where I'm at least getting 10 monthly investor transactions a month in my different zip codes. And so right here is total investor transactions for 6 months. Rolling Meadows is 22. So we do the simple math on that. 22 divided by 6 gives me, 3. And so like, okay, cool. So I grab that one. I grab the next one. I grab the next one. And I want to at least be at 10 in transactions ideally. Usually this takes between 3 to 5 neighborhoods or 3 zip codes, depending on your market. Okay.
Question though, from this. So you're diving in obviously in the neighborhood, and I understand exactly what you're saying. You got the MO investor transaction as the way that you're going about that, and the investor transactions is just saying the total amount of investor transact. I'm trying to read this through, and based off of that, is any of that linked with the investor score from the data itself?
Yeah, good question. So yeah, I'll show that. Undersold properties. The quick answer to that is yes, you can correlate with the best investor score for the right amount of investor transactions. so that within those neighborhoods, you could hit very particular investor scores. Um, what I like to do is I like to triage my data. I like to say, hey, those neighborhoods are great neighborhoods. There's a lot of investor transactions. Um, I'm just going to focus on hitting that whole neighborhood for like my cold calling, but for my direct mail, I'm going to add in an AI score to try to narrow in to those specific things, or at least in another distressor or something like that, right? I don't want to mail the whole neighborhood, probably, or maybe I do, depending on how bullish I am on that neighborhood. But I definitely, what I know for certain is I don't want to mail the whole county, right? I only want to nail particular zip codes, and most likely, like, let's go into a zip code here that's clearly like a great zip code. 73034 has got 60 days on market. This one's 57 with 47 transactions. So like 73012 looks to be probably our best zip code in terms of investor transactions and days on market, roughly. There's definitely some others. Actually, this 73110 is pretty sexy. So let's go down there. So if I look at that zip code, because it's such a good zip code, like I may just hit everybody there that is within my very high level, right? Which is maybe, let's just say it's 20,000 people. But then I add an
Yeah.
AI score to the equation and it brings it down to 10,000. Maybe I don't want to send $5,000 in mail in just that location. So instead, I then add my neighborhoods to the equation. I'm like, okay, cool. I'm just going to hit Highland Park. I'm going to hit Del City Southwest, West, and Chester Park for mail, and maybe even like Del City South. But I'm not going to hit like Patrol Road or like whatever, Southeast 35, like
Sure.
some of these other areas, right? And so I'm just
So
triaging my data down to prioritize the right amount of effort to the right people.
cool. Stupid question probably, but how? So you literally click one. How am I creating a list from that? And
Yep.
how is that incorporated across from Dataflick if I've already imported Dataflick data, right?
Yep. Good
So
question.
how am I okay?
So I'll cover that, and I know I'm gonna skip I'm gonna skip ahead here so I can make sure I take care of you because you got your call like right now, right?
They wanted to put it on pause, so I'm here
Okay,
100%.
perfect. All right. So let me do sold properties real quick, and then I'll show you that because this will be important for you. So what we're gonna do is now that we have an idea, what I typically do, let me go to Oklahoma here, and I'm gonna go and I'm gonna go into Oklahoma City or Oklahoma County. And what I'm going to do is I'm going to scroll down here and I'm going to look at Oklahoma County as a whole for my market analysis. I'm going to say, okay, I see that it's the same basically. I mean, you got 10% at 100 to 136,000. I probably don't want to focus on that data set right now. It's not to say there isn't zip codes I will focus on. There could be buyers there, but most likely it's like maybe some rental areas or some areas that aren't moving as quickly. I'm probably going to focus between the 135 and the 400,000 price point. Or really, I would pull data between 100,000 and 400,000. All right. And then I would add in the top and bottom once I've figured out what I can truly pull from this area. Or if I'm doing a lot of deals here, like I'm already established business and I'm doing a lot of deals in this price point, maybe I would focus specifically on those price point neighborhoods. But generally speaking, I'm going to pull data around this. All right, so let's keep that in mind. The
Yep.
next thing I'm going to do is I'm going to look at my home ownership rate. This is really important for people that are flipping and just generally, just period, even if you're wholesaling. I want to understand the county's level and percentage of owners versus renters. Because if I go into, say, this zip code that I really like and I select it, now I see that it's 50-50. So there's some neighborhoods in there that are predominantly rental neighborhoods, and there's some that are predominantly buyers for end users. So at that point, like I want to keep that in mind because if I'm a flipper, then I probably don't want to do anything in those neighborhoods that are primarily rental neighborhoods, because my only person is an investor and it's going to be a lot more difficult right now. So instead, I would find those specific neighborhoods that are, let's say, this Highland Park. That one is, again, it's 50-50. So some of these might just be literally absentee owners. Say this one's right here, 60% owners. So like I probably am going to focus pretty aggressively. If I do both those counties, I can start seeing more predominant. There you go. Like that area, Fallen Meadows Estates is predominantly owners. Something to remember though is that when it comes to nationwide data, a renter is really just equivalent to like an absentee owner. Okay. So when I'm looking at this map, and I'm going to remove this, I'm going to go to zip codes. A really important thing to do, and I do this purposely when I do this training, is I want to show you guys how important it is for asset classes. Top right corner, I add in single family residences because if I look at my property types, there is quite a few different types of property types. Land accounts for 7% of Oklahoma City. So I'm going to focus this just on single family residences, and I want to see how that changes my numbers here. 73110 is still great, and often most of these other zip codes are still very good. Everything still looks good. Sometimes it changes drastically. Okay, I mean by a lot. And now we can also see that our home ownership rate is predominant. And so there's a lot of people holding absent land within that area. If I click on 73110, notice it did uptick a little bit more, but there's not that much land there. It tells me it's a very dense area. Okay, only about 6% ownership rate change here. And so that tells me that's a good area, a nice dense area for single family residences that probably has a good amount of addresses. Okay. And so we just take all that in mind. So what I do is I grab a notepad and I input some of these zip codes. So starting with my favorite to my lowest. And so I do 73110. And I like to just scroll down here and look at my table. And what's interesting here, if I look at my table, I can see that sometimes, just like I showed with Destin, Florida, it has the highest amount of investor transactions, but it has like extremely high days on market. If you're a wholesaler, that doesn't matter as much. You just got to count it into your offer to make sure you're compensating for your buyer, right? Unless the median home value or price is way outside of the average of the market, I don't care. I'm still going to, as a wholesaler, I'm okay with that. I mean, I would rather lower days on market, but I'm also, probably worrying about volume. It does depend on the operation, but in general, Oklahoma City, there's no wrong answer when it comes to days on market. And there is a lot of zip codes that are having a good amount of investor transactions. This is clearly a busy market. The big question when I see something like this is, well, how many of these are buy and hold investors buying, and how many of these are flippers? And that's where sold property starts coming in. So I'm going to go ahead and I'm going to take I'm going to go ahead and take, and I'm going to say, okay, 7-3. I'm just going to look at the map because I also like to try to keep them close together if I can. I don't know, like being remote, I'd have to put this in Google. I don't know how far of a drive it is from 73012 to 73110. It looks to be about 2 hours or something, maybe four. I don't know, but
No, not that bad.
not that
This is
bad.
all in
Okay.
Oklahoma County. No. We have multiple acquisition agents. And we cover um Norman, El Reno, which is not even highlighted right here.
Okay, perfect. So in this case, I'm not restricted by a lot. See, the reason I mentioned is a lot of I'm personally one of them, and a lot of other larger operations or just most operations today prefer in-person appointments to lock up deals.
Oh yeah,
So
100%. That's exactly what we
okay,
are.
yeah, yeah,
We're boots on the ground.
perfect. So in this case, like I'm going to bring in most all of these zip codes for the most point, but I don't care about any of these other ones. But there's definitely less good zip codes than there is bad zip codes. So I'm going to list them out in order of priority based on the amount of investor transactions. So 73012, 73013, and I will caveat this, like I'm teaching you guys something that like you would ordinarily like join a mastermind for and have to learn all this stuff, and you're probably not going to learn it. Instead, you're going to pull the whole county and you're going to waste money. Like if you want to just say, hey, I just really care about this city and go market to that city or this specific 3 zip codes, then do that. I'm just teaching you, you're in a training right now about how to analyze a market and find the best locations to reduce your
For sure.
marketing costs and increases. So I just want to make sure we're clear there. So I'm going to do 5 zip codes for you. I'm going to add in, this is a good one, 73120. And let's do, see, like this zip code here 73119. It's great. It's got a lot of investor transactions, but look at the median sales price at 93K. This would take it out of my top 5 because it would tell me that most likely this is an area that has a crap ton of rentals. Probably, it could be gentrifying. And I would only, I would have to do more research to know that, but like at a high level, I would remove it. Out of these 3 zip codes that are good, I'm leaning at the 73112. Because it has a little bit higher price point. I would have better buyers and so on. So that's why I would choose that for so everyone knows 73112. All right. So that gives me 5 zip codes. So now that I have those 5 zip codes, I just want to keep those in the back of my mind. At this point, I understand the demographics. I understand 1,600 monthly rent. And if I select just those zip codes that I had, I can see those averages. I'm just going to grab a few of them here. I can see those averages now. I have a higher ownership rate, which is ideal. I can see that 31% is within that 215 to 360. We do have a decent amount that's probably in that 175 to 200 price point. And we can see that my mean investor transactions is 26. So that gives me over 10. Like I should easily be able to pull in 5 deals a month without worry in these zip codes overall. Okay. And I see that I am 2 beds, 3 baths. I would just go from 2 beds or up. And then age of the property is important. There's a lot of properties that are over 2,000 in this area. Predominantly, what I want to see once I go to sold properties is what is the average years of these properties that I see are actually being flipped. Okay. And so most likely it's going to be between 1940 and 2000. Not very many are going to be 2000 or newer. But knowing that, I want to eliminate those, 2000, that 23% of data because it's going to be wasting marketing dollars. Okay. Especially if I'm sending mail. It's not to say deals won't come from it. It's that I would want to, instead of marketing to those people that are like those properties that are over 2,000, it would be better for me to reallocate those funds and put them into another neighborhood or another zip code. Right. Okay.
Sure.
So we're going to go into sold properties now, and we're going to go to Oklahoma. And then I'm going to go to Oklahoma again. Oklahoma. All right. And then I'm going to move it to 6 months here, which we already have. And we can see something to note here. This investor transactions inside of production REISIF, meaning the stuff that you guys have access to. This is based on our old investor flagging model. The old investor flagging model was very conservative. It only looked at like Tyler sold to Florida Cash Real Estate, and Florida Cash Real Estate sold it on market, or sold it like to an end buyer, right? So it was a lot less. And so what we did is when we did the merger, I came in and I added 15 more criteria, including flagging every transaction as whether it was a flip, a rental, a wholesale, or a wholesale. And a level of investor activity. We're not showing that here on production, but within staging right now, what will be released this week is I would say this is probably actually like 1,000, not 513. It doesn't really matter because it's actually more accurate. And I just want to make sure that people know that, because sometimes they catch like, well, Market Finder said this many. That's because Market Finder is actually looking at the new model versus sold properties is not. The reason we had to do that is because of the AI score. It takes time to catch those up because the AI score is 2 months behind. And it's been 2 months since we did that change. And so therefore, here we are. Okay. Not really relevant to everybody, but I like to give more information than is needed so that you guys understand what's going on. All right. Okay. So once I'm here, I want to make sure we understand what this AI score means in regards to sold properties. The only thing that it means is that, hey, these properties that were predicted, okay, had over a 50 AI score. So we said, hey, this property right here, owned by 1041 Harris LLC, that is an investor based on our flagging. It had over an 87 AI score at the time the investor purchased the property. Okay. It also had absentee owner distressor, senior owners, free and clear and vacant. Okay. And so again, what it's saying is that out of the transactions that we flagged as investor transactions, 60% of them had over a 50 AI score. But remember that investor transactions do happen under those ranges. Okay. That's the delta between what we flagged as investors and what we haven't. Sometimes somebody buys a property and they've only bought one in their lifetime of being a company. And so maybe we don't consider that an investor yet until there's more activity, for example, right? So there's variabilities here. But as a baseline, what it tells us is that if I did pull data in Oklahoma as a county and I focused on the AI score ranges between 50 and 100, I would reduce my marketing dollars by whatever the delta is in the amount of records that is, and I would get myself in front of 60% of the property of the people that have bought as investors. Okay. And so it is a metric to reduce your marketing costs to get in front of more people. It does not mean you should not market to those others. It just means that if I have a high AI score and I'm in these areas that matter, I should probably be doing more than just cold call you. I should really be owning that data set. If I don't have AI data, it's not that I can't succeed in a market. It's that by having AI data in a given county or counties, it allows me to have a competitive advantage to reduce my marketing costs and better target my leads, my not interesteds, by segmenting those people that do have a higher AI score because they point to having these levels of indicators that they should in fact sell, right? If you trade the stock market, this would be like having an indicator of like your EMA or your regular moving average or buy pressure or something like that. Like you can buy blindly, and it's not to say that you can't like use your noggin and say, hey, it was high and it's going low, let me buy and sell. But by using your indicators, it allows you to be a little bit more tactful to reduce your risk, right? And so think of it in the same kind of method. What I like to do here is I like to look at my top patterns here, and I like to look at my distressors and see what is the predominant stuff that's going on with the properties that are selling. And I see that 51% are free and clear, 36% are absentee owners. I don't care about the fact that 36.5% are absentee owners here. I care about the fact that that means that 64% are owner occupied. What I get frustrated with is when people think that absentee is a form of motivation. And it's really not. Absentee is a form of making it easier for me to be able to buy the house. When you're not living in it, it typically is easier for me to do a transaction, right? And so what they do is they just pull absentee records as a way to narrow down to more motivated people, but that's not necessarily true. Because if I'm living in my home and I'm in foreclosure, yes, there's more things to work around, but motivation level oftentimes is higher because will lose the roof over my head, right? And so we got to think about it from a different angle. A lot of times we think about it like me, what's valuable to me, rather than thinking about it from the shoes of the person that owns the asset. Convenience, yes. Glad that they're absentee. Shoot, I'm glad when they're out of state absentee, right? I'm glad when it's out of state absentee and vacant. All of these things are great indicators of meaning that, hey, if this person has a high AI score and they meet those criteria, and I've already tried to call them or I've already sent mail and I got return mail and I haven't got a hold of them yet, it just means that I need to know who those people are. Maybe it's only 100 records, but I'm going to focus on getting a hold of that out of state homeowner that has a vacant property in Oklahoma City because they meet this perfect criteria. And if I don't get a hold of them, somebody is, and I'm going to be pissed off because I'm going to click on in my records and I'm going to see that record is in my account. I don't have Oklahoma City data, so it's obviously not going to be in here. But if I click on in my records, I'll see that address. I'm like, oh, damn, I've had this record. I didn't get a hold of them and the property sold to somebody that I know. How did that even happen? Right. And that's the kind of stuff we're trying to reverse engineer our losses so that we can continue to improve upon our marketing. Right. And so I like to know my patterns. This pattern allows me to set my base criteria, like my high level, and then I narrow down my AI score based upon that pattern. So like I could do high equity properties with a high AI score. Now, most like 90% of high AI scores is going to also be high equity. The reason why that is because most investor transactions have equity, right? Because they have to. It's only
Yeah.
the, a little few. So some people are like, well, can I just pay, just pull all high equity data? I'm like, yeah, you can, but then you're going to have 100,000 records instead of like 30. So it's, again, it is a way to reduce my marketing costs more than it is to give me this magic bullet. It is one lever out of a understanding of a bigger picture. So, all right. Cool. So I look at my distressors. Once I understand my distressors, I look at my home prices and validate to make sure that I am in fact within this price point of the 215 to 340. And so again, I'm going to be between 100 and 400,000 is what I'm going to focus on. All right. Then I'm going to go over here and I'm going to look at my year built. I'm going to see the amount of properties that have sold and what, was the age of them. And it's actually quite a few that are in that 2000 or higher. But again, I'm going to still validate that because this is actually looking at all transactions, not just investor transactions. It's really important to know that as well. Bathrooms, I'm going to take a look at 1 bathroom or more, bedrooms, 2 or more. All right. So I'm looking now and I'm validating my property characteristics and what's going on. My predictive AI score, most of the time, 40 or more. Anything below 40, you're basically in that realm of just high equity data. It's not to say those properties will not sell to an investor. It's just that they're less likely to sell to an investor. And that's why we still, as businesses, start doing SEO and doing Facebook ads and doing PPC, because those forms of marketing are a lot more hands-off, a lot less operational intensive, and allows me to, still capture the bottom of the market that is not really that motivated. They're opportunistic. The difference between opportunistic sales and motivated. Okay.
Sure.
We're trying to be in front of the motivated people as much as we can. And we still want to be seen and be heard to the people that are less motivated or opportunistic sales. Okay. And well, I'll get the questions here in a little bit. I want to get to the SIF map pulling of the data stuff here. So really important. All right. So we want to understand that. And so I take all that information. And now what I do is I go to the investors tab and I just keep all this stuff in the back of my mind. Maybe I jot it down because that's my way my mind works. But instead, I'm just going to go to the records page now and I'm just going to look at the names. And I see, okay, first of all, that's a buyer, whoever these guys are. 3 MPH remodels. They're busy. All right. So I'm going to look at my investors. I'm going to click on the addresses. I'm just going to click on a few of these and I'm going to go back and I'm going to click on maybe this one, 3-tone properties, go back. I'm just going to click a few of them. When I click on them, I'm looking at the sale amount, because remember, home price is the value. Okay. That's the value of the properties. Sale amount is what they bought it for. All right. So just keep that in the back of our mind. I'm just seeing what the prices are. I haven't even added our zip codes in here yet, by the way. Okay. So keep that in the back of your mind. But I'm just clicking on a few of these and I'm looking at the history. I say, okay, they bought it for $22,000 and they sold it for $50,000. Same day. So this would have been flagged in our system as a wholesale. Okay. That would have been a wholesale. And now that buyer has it listed at 200,000. Or they might have done something different here. They might have bought it. I'd have to look here a little bit differently, but they might have actually bought it and then paid themselves a wholesale fee possibly, and then closed. I don't know. Something unique happened here. But then there was a deed transfer back again, and now it's listed. So in either case, I would call this agent as an agent that knows a buyer, and I would, work with them to build a relationship. And I know that this is a flip. I'm looking at the beds, baths, square footage. I'm just thinking of it in the back of my mind. Okay. Beds, baths, square footage. I'm around 1,500, 3.1. Okay. I'm just going to keep that in the back of my mind. 3.1, 1,000 square foot. They just straight up bought this one. So
That's us.
Oh, that's you guys?
We're agent on file. Brooklyn Fraser is our team, the brokerage.
Oh, cool. Awesome. So, all right. So yeah, so 3.1, 1,000 square foot, 1,100 really. Okay. And so I'm going to do that for quite a few of these properties and just get an idea of what's going on in that area across the board. Now, these are not within my zip codes. Wow, this is a big company of some form. 5 Capital Investments. Maybe they bought a portfolio or something. Here we go. There's a good one. Home buyers, 4B1G home buyers. All right. So this is probably some sort of rental or quick flip. So this looks like, again, like another little wholesale. So this isn't that zip code where it's low estimated values. So a lot of operational overhead probably in these zip codes. Some businesses like it, some businesses don't. Okay. All right, so I'm just going to validate. I'm going to look at the square footage. I'm going to look at the beds and bath sides. I'm just going to understand the characteristics of what people are actually buying and then saving in the back of my frontal cortex roughly that sale amount. Okay, that just gives me a tempo of what I need to be around in general. All right, so I just keep that in the back of my mind. All right, so now what I'm going to do is I'm going to add my advanced filters, and I'm going to switch this particularly to property type single family residences only. Okay. And I'm going to look to validate to see how that changes. Not much is going to change. Most of it's going to stay the same. We like it. It still looks good. And I'm happy. I'm then going to look on the right-hand side and just take a look at these distressors, like what problems are happening: bankruptcy, senior owners, senior owners, senior owners, senior owners, absentee senior owners, vacant properties, senior owners free and clear. Every one of these criteria, if you were to focus on all absentee owners, and then you had another one for all senior owners, and then another one for all free and clear properties, and then all vacant properties, it's going to be a lot of addresses, right? But if I focus on just AI score 50 or more, right, again, I just thin those out. It's not to say I don't want to focus on just senior owners in particular neighborhoods. It's just saying that I can understand more about how I can refine my data. Okay, let's add our zip codes in here. 73110. 73012. Now, depending on the amount of properties in a given zip code can really drastically change like prediction rates here. If it's a bigger zip code, it's going to be better than not. It's something to be aware of because it could signal that there is overall less distress within a given zip code. Okay, so 73013. 73120 and 73112. Okay. So still looking pretty good. All right. What I like to do after I do that is just, again, look at these different properties, look at the sale amounts, look at the distressors, look at the predictive scores. You'll see sometimes there is properties that have a low score. Then I like to look at the stressor and see senior owners free and clear or senior owners high equity. So yes, if I was to say, hey, for my high equity senior owners, I'm going to text through all those. But if they have a high AI score and they have high equity, then I'm going to direct mail them too, right? You can kind of combine some of these things together and just don't try not to market to the same people in multiple strategies at the same time, unless you're really specifically trying to get a hold of them. Otherwise, try to be sequential, meaning you call them first, then you text them, then you send mail. So you do cheapest form first and then more expensive last. All right. And so again, I just like to look at a few of these. Just like I mentioned earlier, get an idea. They bought it for 62. They're selling it for 145. There was a good name here a second ago I liked. Designs. Let's try that one. Bought it for 350. This one's got some weird stuff going on with it. I don't know. They probably just own multiple properties or something somewhere, so they're flagged, but it might be a false potentially. That could happen. Not immune to it. But again, I just take a look at it. Just it's a great way to get an idea of what people are buying and how they're doing deals within a given market. Okay. Especially if they end up having it already listed. Really love this because it means that I know that they're flippers. I know they got stuff going on. Ball Game LLC. Bought it for 81 and then deed transferred it over. Maybe they did owner finance or something. Who knows? Okay. So main thing here, sale amounts. I can see some decent sale amounts. I can see my top patterns between my price point 215. Now you can see that price point between 100,000 and 200,000 is a little less weak, but it's probably closer like 150 to 300. What I could do to validate this is I can click on my filter, advanced filters, and change my estimated value and put it between like 175,000 and say 400,000 and just see how much that changes. It dropped it quite a bit. So we don't want to do that, right? We probably need some of those properties in that lower 100,000 to 400,000 price point. Okay. All right. So once I have an idea, I know what zip codes I want. I know what people are buying for. I can see the property characteristics of these assets, are what they are. Because again, I'm trying to get as close to the avatar. To me, from what I'm seeing, just to give a summary of Oklahoma City or Oklahoma County, I like these 5 zip codes. I like the price point between 100 and 400,000 in estimated value. Most of the time, I'm going to be buying the property between 60 and 175,000 cash. I might go a little bit higher if the properties are in decent condition and it needs lighter rehabs, but it's going to be between 100 or 60 and 175,000 cash offers in these zip codes. And my property characteristics is going to be on average, between a 3-bedroom, 1-bath or 3-bed, 2-bath is going to be like the avatar. But I'm going to pull the data for, as long as it has a bathroom and unknown bathrooms, or at least more than 2 bedrooms. Okay. And so what I'll do now is I'll go to Sift Map. And to answer your question earlier, you asked a question around the data that was inside that came in from Dataflick. This is all on your records page right now, whatever it was. And I'm sure that some of these addresses that I'm about to filter by would be there, right? In fact, what is your, put your email in the chat so I can impersonate your account so we can actually filter by AI score and stuff there. Let's see if it works here.
I think you may have just created your account this morning. Is that right?
Yes.
Yeah, okay. So I think the first step, I just saw your email come through, so I'm actually replying back to that. But I think what we need to do first is to be able to send the data from your Dataflick account. You'd need to select to send it one time. So if you go into the Dataflick dashboard and go into the integrations, there's going to be an option that you can select to send the files, and then once that comes through, it'll start populating those other files in there.
Yeah. Yeah, you can populate stuff back. But what I will say is you don't need to do that. If you wanted to, you could literally just filter. If you wanted the most up-to-date current list, all you'd have to do is filter by Oklahoma County or whatever counties you have, go to your AI scores, put 40 or more, click apply, and then say hey, I don't want properties that have been owned for, I think the default Dataflick list was it had to not have sold in the last 2 years. So you do 2 years of ownership and then click apply. And this is basically that list. It's 104,000 records. Now, at different times, you would receive different records. But that's the total count. Oh, and then we do just single family residences, for example. So it's 90,000. So if you just downloaded these 90,000 records or just narrowed into those, you would have the same data that's over there. Of course, you can send those files over, but you might think that you might show 200,000 records, in Dataflick, but once they get into your SIFT account, it might actually only be 90,000, because it's a lot of the same data. So anyway, it looks like it is connected, so we're good there. So let's go ahead and do this. What I'm gonna do is I have it filtered by Oklahoma County. I'm gonna do my price point between 100,000 in value and 400,000, and click apply. This is across all of Oklahoma right now. And I have the AI score of 40. So let's go ahead and remove that for now. Okay, we're at 130,000 single family residences. All right. I want to say I want at least 2 bedrooms, 1 bathrooms, but I also want the unknowns because that's a nice gap that a lot of people don't get when they filter by other products. And then under my more filters, I'm going to add my year built. Okay. And I'm going to go between 1900 or 1940 if I wanted to. I'm just going to do 1900 up until 2010 from what I've seen on our data. There was a good amount that was in the 2000s, but it looked like most of the addresses when I selected them were, still older than 2010 when I selected the individual investor transactions. All right. Years of ownership, I like a minimum of 5 personally. Again, you can look at your distressors. Oftentimes you'll see that a certain percentage of your distressors within sold properties is, let me do it from your account here, is going to be tired landlord. And so let's just see what that is for you. %. So it's not that massive to own the property for a long period in time. So 5 years is probably what I would put there. I wouldn't restrict it by like 15, so like 5 years of ownership. So at this point I have year built, I have 5 years of ownership. I'm not restricting it by absentee or not absentee, and I'm single family residence. This gives me 92,000 properties that across Oklahoma County fit, the Oklahoma's kind of buy box, if you will. All right. But now let's add our zip codes in there because we know those are the ones we want to focus on. You can, of course, add more. We're just going to add these in. So 3-1. Let me do this for a second. 3-1, 3-3, 7-3, 3-1. 73112. Okay. So we added those. I'm going to click apply now. It's going to say, hey, within Oklahoma County, I only want the addresses that meet this criteria within those zip codes. Okay. And that reduces down to 23,000 properties. And so this would be like my large list. This would be my big blanket. If I was doing cold calling and SMS, and I was using an agency or something, like these are the ones I'd really have them calling and hitting through. And I would increase the amount of zip codes, increase the amount of neighborhoods, or whatever. But, for cold calling, it's typically going to be a zip code level. All right. Now, if I add my AI score here and, I can do a specialized cold call campaign to make sure I'm calling these 13,000 people, or I could do it only these 13,000. Again, it depends on the operation, but these 13,000 are have a high AI score. They're within my target area and they have the criteria that I care about, and so I would want to make sure I hit those. Depending on my direct mail budget at this point, it's like, well, I don't want to send $7,000 in direct mail or $8,000 in direct mail, and so I want to narrow this down a little bit more. Some people would say, okay, well, let me increase my AI score. That's not what I would recommend. I would look at my sold properties and figure out what is the predominant next motivator. Okay. And so it would be absentee owners, or I would go into the neighborhoods that matter within these zip codes to me. And that would be my targeted direct mail. Okay. And I would expand or decrease the amount of records based upon my marketing budget and gaining market share within those locations. And so what this looks like on like an ordinary basis, is I do my market analysis. I understand my top areas, and I am on a quarterly basis redoing this analysis, but I'm coming in here on a monthly basis and I'm saying, hey, let me repool anything that's new that meets this criteria. The truth is that in like next month, this might be 14,000 and only 600 people are new. It's like, okay, so what's more important? Making sure that I continue to market and learn how to pull deals out of the 13,000, because what I know for certain is if I go to sold properties in 3 months from now, there's going to be a ton of sales from these 13,000. And so I want to make sure I understand how to get in front of these 13,000 people. And then those new 600 people, what I want to make sure is that I know who they are and I add them into the top of my funnel. Okay. And so that's where the records page and filtering by like new records that haven't been marketed to yet, but have phone numbers and need to be sent from marketing comes in. All right. And this is how we really start honing in and understanding the data. And out of these 13,000, if I'm cold calling, I call through all of them. It's like, okay, for every 100 dials, there's 2 to 5 homeowners where every phone number is wrong or dead. So do I have a process to make sure I have sent mail to those people? Or do I have someone in my company to start digging into the family members to reach that person? Little things like that is how we start pulling a lot more deals out of the existing data set that we have. Because at the end of the day, we only got 90,000 records. And so if you were to pull down these 90,000 records today, did I just remove it? I do. Oh, yeah. Well, in this case, I have 23,000. So we only got 23,000 records. So if I give these 23,000 records today, or I just give the whole county, what's the difference between the person that, knows how to market, is like coming remotely into your market versus the person that's boots on the ground there? If not narrowing into the data, it's nothing. We have equal playing field. Besides the fact that you have nose to nose, acquisitions, right? That would be a big importance. But for anybody else, if you don't have nose to nose acquisitions, like if you're not doing these types of things and you're not digging into the data, you're not understanding the sales, you're not adjusting and putting the right marketing efforts to the right people, what ends up happening is like someone just comes in your market and starts stealing your deals. For me, it's people in Miami. They just pull the whole area and then they start marketing and they start stealing deals because they're just blanket marketing, but their expenses are just so astronomical that like it's nothing that I would ever want in my business, right? So anyway, so once I pull the criteria, I add the AI score and I do all those things. I just select the records and I click add to account and I add them to whatever list I want to call this. Like maybe it's top 5 zip Oklahoma, and then I could add a tag for like, high AI score or 40 plus AI score, whatever I want to do there. It's like an internal decision. Then I download them and they go to my records page. They get automatically skip traced then. And then I export them or send them through an integration to be marketed to. And then that data is being updated real time as we market. And how I steal the deals from my competition is as I'm marketing, again, I'm updating the data and I'm watching for particular criteria. I'm watching for that high AI score to have every number wrong. Right? Because if that ends up being the case, I'm going to go door knock them. Have acquisitions boots on the ground. It's a perfect time for me to say, hey, if you have nobody to go an appointment on, here's your list of 50 properties to door knock this week, and pull deals from those. So there's just so much, to so many, different threads that you can pull down. But let's just say I wanted to hop into a new neighborhood. Now with SIFMap, I can literally just do that. I don't have to worry about it being something that is, I got to wait at the end of the month or do any of these things. If I switch to neighborhoods here, let's just say we like that one neighborhood down here. I think it was, what was it? It was like, it had a lot of transactions.
Why would question on you first went neighborhood or you went zip code first? Why wouldn't you go even tighter and just do just neighborhoods?
You could.
Rather than the entire zip code, and then you would be even smaller, and then you can expand into the different the different counties.
Yeah, no, that is
Like
that
I
is
said,
100.
we have five counties that we cover currently. Obviously, right now we're doing a more of a a shotgun approach, which I absolutely hate.
Yeah.
Spending a lot on marketing. We're spending $70,000 on marketing a month. Like I want to really dial it down. But having said that, right, I would want to hit more than obviously the 10,000 or whatever that
Yeah.
you had. So would if you are in that if you're in that area, would you go instead of zip codes first, you would go you go neighborhoods first and then just get all the blue in the neighborhoods?
It just depends on like how much, like what types of marketing I'm doing. If I'm doing direct mail, if I'm doing cold
It's all
calling.
the right when I'm talking right now, it's direct mail. We don't do cold calling really, with all the issues and all that kind of
Yeah.
stuff. We just haven't really done that. It really bogged down our system as far as the amount of total leads coming in. The quality wasn't great.
Yeah.
And so, and it's more of a headache because you got to, pay for either a company to do it, which is more on top of that. You got to get the data, then give it to them. They got to call, you got to
Yeah.
train them. It's just a headache. Or you do it internally, which is still can be a headache. So we're
Yeah.
doing direct mail oriented, and then we're also doing obviously Facebook, Google, SEO, that type of stuff as well. So yeah, but I'm trying to
So
get our marketing down pack or
yeah.
direct mail down packed.
So a company like yours, what I would recommend doing is the neighborhoods, right? So if I look at that neighborhood that had, I think it was like 8 investor transactions a month, there's only 1,000 properties in that market, with or without AI score. But maybe I only want to focus on the ones with a high AI score. If I do that, a 40 or more, then that's going to give me 800. And so I would do that to say 20 neighborhoods across Oklahoma City, right? And then, or 20 neighborhoods across 3 different counties, right? And that would give me roughly $10,000 a month in direct mail. If you guys are spending 70, you're going to need a lot more addresses. But at the same time, it might be that you don't need to be spending 70, right? Like
Correct.
analyze the leads
Yeah,
you have coming in.
100%.
Yeah, and maybe we can get you down to like 25 in spend and still be doing the same amount of volume, and then simply add, instead of spending, $50,000 more a month on direct mail, let's hire like 3 VAs to be deep prospecting and calling your return mail,
Sure.
and generating leads like that. Like, so, and then also maybe we add first to market strategy in Oklahoma City to where we're calling every new probate that comes in instead of bulk dialing. Let's hire a couple specialists, right?
Right.
So there's a lot of
And
things
then,
you can do there, but
yeah,
for the
sure.
direct mail, it's neighborhoods for sure.
Yeah, because we want to eventually be obviously on TV and stuff like that. So like I haven't, we're not. It's not like we're going to change the amount of marketing that we're doing. It's not like I don't want to lower marketing. I want to reallocate it into better areas
Yeah,
that can give me stuff.
exactly.
So I don't want to be going back to cold calling and cold texting. Instead, what I want to do is say, hey, we're spending $45,000 in total off of mail, and I want to get that down to $20,000, but I also want to be making still $250,000 off of the mail,
Yep.
and moving forward, right? So now I'm getting what I'm wanting out of it, but it's more of a snipered approach rather than
Yeah.
currently shotgun. And then I'm reallocating the remaining, $50,000 into Facebook, at more on driven on SEO, which gets the
Yep.
other part that you're talking about, and then also holding a budget ready for radio and TV.
Yep. No, exactly what you just expressed is what, would be my recommendation. Narrowing in and using this advanced geography is, it's just an amazing tool, to be able to narrow in on those neighborhoods and just pull records just within that area. I can add my AI score to it. I could increase that AI score. I could say, hey, they need to be in this neighborhood, have over a 40 AI score, and then let me add a distressor for they have to also be a senior owner, right? And then I could add that to the equation. That's going to be like 152 people. It's like, okay, I'm going to
Yeah.
mail the 800. But like if I start getting return mail on the 152, then I'm going to deep dive those 152, because there's a huge chance that those people have passed away.
Right. Right.
So there's a lot of different combinations to kind of do, and there's always another like layer that you can go down. But yeah, generally speaking, what you're expressing is really what we're focused on as a whole, right? Analyze the market, find those neighborhoods, reverse engineer through sold properties. If I go to this neighborhood within Market Finder or sold properties and I see like, oh man, I've downloaded every record that matches the criteria in there, and there's like 3 properties that sold in the last month. Like, why did that happen? Let me go look at that record in my SIFT account and see, okay, it was a return mail. Okay, now we know we need to dial in that process better to process that return mail, because that was the indicator. That was the list. We're just not really hitting it right, you know?
So one other question. Sorry.
Yep.
If I send out let's say the mailers of 20,000, or sorry, $20,000 worth of mail, $30,000 for the mail, right? And I have that inside of records inside of there. So now we've already planned, we've already sent, and now what I want to do is I want to track and be able to come back in and say, hey, of these 90,000, records that of mail that we sent out, it generated X amount of leads, X amount of opportunities. We contracted on X amount of people, and then we made X amount of dollars. So now all of a sudden, I want to be able to see inside of Sift and be able to either, if it's tagging it, I do see that you'll have tags, but basically going back to the records that we sent of mail and then retarget it that way. And then also update those records with internal information that I've gotten from the mail that I've sent out.
Yeah. Yeah, you can do all that. We have users that do that. As far as like the automations of telling you some information from that rather than you have to manually do it, this is kind of the direction of our AI assistants like within the platform. But generally speaking, yeah, like you can track direct mail attempts. If you're sending mail within our platform, it automatically increments those. But if you're sending it externally, like you guys probably have someone local, when you select that data and you export that data to build that list, you're going to click update attempts and just toggle the direct mail attempts. And then as you have that mail come inbound, you're going to come in here and you're just going to tag it with return mail if you get return mail. If it generates as a lead, you guys are going to have that go into Salesforce, but you could just come in here and also manually update it as new lead and
right.
Update
have
our
an admin
system.
do that. Correct.
Yeah, and make sure that it's giving that. That way, you can see that information. And you can use custom fields to add whatever, information, like what type of postcard was it, what, things like that, so that you can then in your records page create a filter preset and even make it a quick filter to where you're looking for, hey, I want to see records that have more than one direct mail attempt. They contain at least like a new lead, not interested status, and they were this type of postcard or that type of postcard or this postcard number, and you could just click on those different filters and see how many records come up, and then you could always say, well, I want to how many mail did we send on that campaign or whatever. You could always just filter by the tag for that campaign and see like, okay, we sent 1,000 people, we had this many responses from this type of postcard, this type of postcard. You could definitely do that. Technically you could also then put it into a SIFT-line board and you could see, that pretty clearly of how many came from what, if you really wanted to. There's a lot you could do there and make your own, but quick answer is yes.